Traders, in today's video, we're going to cover a covered call strategy here in Apple. It's really simple to do, and it's fantastic if you're owning stock and want to create a little bit of income by selling that out the money call option. So here I am. I bought 100 shares of Apple stock right around this. There we go. Let's pull up Apple. Right around 320.85 was my fill. So I own 100 shares of Apple stock right now. The next thing I want to do is go to the option market. Okay, so here I am. I pulled up my option grid, and now I need to select an out the money call option to sell. So in my opinion, I don't think Apple's gonna rally $20 by February 21st. So that's monthly option expiration. So I'm gonna look at the 340 call options. They're going for about $4.10. That's $410 per one lot. So I'm gonna go here and look to sell the Feb 340 call options here at $4.10. So I'll click on the bid at 410. Now, one thing, see how it automated to 10 contracts? Remember, I have 100 shares of Apple stock. Each option, each one lot in the options market represents 100 shares of stock. So I need to sell one contract only because I only have 100 shares of stock. Now I'll do that. Actually, now they're 405. Let's see if we could get 410. Try to get a little bit more credit here and confirm, and let's send it over. Boom, that order is working. So right now, Apple, the stock's at 320.66 right now. I sold the February monthly 340 call option. What that means is this. If Apple goes above 340 by February monthly expiration, my stock position, so my 100 shares, will be called away. But I need to account for this. Since I got $4.10, that's $410 for selling that call option, my break even really is $344.10 on the trade. So Apple can actually rally a little bit over that 340 since I'm getting a credit for selling that call option. And if Apple stays, let's say right here at 320.5, I'm not going to lose much money, if any. Well, I'll lose about 40 cents on my stock position since I bought it at 320.85, but I'll collect that $410 from selling that call option. So I can do that week after week, month after month to collect money on my long stock position. It's a fantastic strategy if you own stock. And one other thing before I go, always make sure you account for an earnings event in the option you're selling. Like, for example, I just noticed Apple, see right here, they have earnings next week, okay? So that implied volatility on the right is going to spike up. That's why they're implying such a large move. So always give yourself some wiggle room on the upside call that you're selling. Just in case the stock goes higher, that's great. You're still going to make money on your long stock, but you don't want the stock to necessarily blow out and go up, let's say 10% in a short amount of time, right? Because that would be super bullish. Covered call, it's a neutral strategy. It can be a little bullish because you want the stock to rally since you own it, but really you want to do this on long stocks that you own by selling those out the money call options on the covered call strategy.